Hello, and welcome back to the Argyle SMB Finance Leadership Forum. My name is Brittany Sullivan with Argyle, and it's great to have everyone joining us today. A quick reminder to stop by our sponsors' virtual booths at any time during today's event and for the following week. Our partners are committed to providing you with valuable content and a great overall experience. At any time during today's event, you can visit their virtual booths from the main agenda page, which includes complimentary materials, information, and meet and greet opportunities. To ask questions throughout the session, simply type into the Q&A chat, and we will address your questions at the end of the session. Now, without further delay, I would like to introduce our speakers. Lee Irwin, Solutions Engineer at Vertex, Kirsten Jans, Managing Director, Indirect Tax Technology and Transformation at BDO, and Nick Scarlatos, Tax Managing Director, Indirect Tax Automation, National Practice Leader at BDO. We are excited to have Lee, Kirsten, and Nick with us for a panel titled Unlock Advanced Automation Strategies for Indirect Tax Complexity. We have a very timely topic to discuss today, but before we dive into the discussion, I would love to go around and have our speakers give a brief intro for themselves. So Lee, do you mind introducing yourself first?
Sure. Thanks, Brittany. Lee Irwin, Solution Engineer at Vertex. I've been at Vertex for about 12 years. I've been on the sales team for 6.5 years. My background is in corporate tax, and I help people in the small, mid, and sometimes upper corporate markets to solve for their ever-changing indirect tax challenges. Nick?
Perfect. Thank you so much, Lee. Kirsten, how about you?
Yes. Hi, good morning, everyone. Kirsten Jans here, Managing Director at BDO's Indirect Tax Automation Practice. I'm based in Houston, Texas. I've been with BDO for roughly under a year. Before that, though, I was in Big Four and very large technology companies, essentially spending my entire career in indirect tax automation, helping companies, small to large, very large, optimizing their tax functions and automating, creating touchless tax automated business processes. So I'm very happy to be here. Thank you.
Great. Thank you, Kirsten. And last but not least, Nick, how about you?
Sure. Hi, everyone. I'm Nick Scarlatos. I'm a Managing Director at BDO. I also lead the Indirect Tax Automation practice, which we focus on implementing third-party solutions. For me, my background, last 25 years, I've been in indirect tax automation. I've been in public and private tax departments, and I've focused mainly on end-to-end automation and indirect tax recently, from the point of transaction through to compliance. Look forward to the discussion today and hope you all enjoy this session. Brittany?
Excellent. Thank you guys so much for those introductions. Now, Lee, I would love to have you kickstart our discussion with this first question. It is a two-part question, but then we can have Kirsten and Nick both weigh in as well. So the first question, with the growing trend towards tax automation in the SMB and MM space, can you explain what factors are driving this? And why are more businesses looking to automate processes that were previously manual?
Yeah, it's great questions. It's really exciting times in the indirect tax world. If you think about it, historically, there's not been too much excitement that's happened. And then in the last 6 years, we've had monumental changes to the way we approach indirect tax with Wayfair, the Supreme Court decision expanding responsibilities for those companies that are marketplaces to file. And then now more recently, the pandemic has increased the challenges that companies have, right? So instead of being just maybe a regional brick and mortar type company, retail company, they had to move more operations online and found that not only did it take off, in a lot of cases, it expanded their nexus, expanded their presence, and potentially even expanded it internationally so that they had greater exposure. So that long shadow of the pandemic, I think we're still seeing that at Vertex. We still see companies come to us and say, we're just growing like crazy. We're omni-channel now. We thought we were just going to be in the Northeast or in the Midwest or wherever we were, and now we're nationwide. We're into Canada. We're even in the UK. How can you help us solve for that? And we do help them solve for that in multiple different ways. But yeah, solving for the omni-channel, I think, is the first reason why We've seen those tax automation trends increase in that direction. And then why would you automate? Well, I think the main reason companies think about automating is well, there's a couple reasons, right? There's more complex rules. We just finished 2023. We do a yearly compilation of what rules have changed. And in 2023, 372 changes to tax rates, 230 new taxes. This is just indirect, by the way. And then on rolling average, we do a rolling average of 10 years. So about 600 rate changes a year have happened over the last 10 years. That's a lot to keep up with. And if you're just relying on a native tax functionality that comes out of the box in your ERP, you're going to see that there's gaps, right? And so many of the companies that come to us, the last piece to my answer, so many of the companies that come to us are coming to us because maybe those first two compelling events weren't enough to drive them to automate, right? Maybe Wayfair wasn't enough. They still were able to handle it. And maybe COVID, they could still handle it. But then they've now decided to upgrade their ERP from a QuickBooks or Sage to a NetSuite or Microsoft. And they see that the native tax functionality just has gaps. And they want to fill those gaps. And as long as they're addressing an ERP gap, they might as well address the tax gap as well. So that's kind of the three compelling events that I see in my space. Don't know if Nick or Kirsten have any additional thoughts.
Yep. Yeah, no, I think what Lee's indicating is right on target. And I think another key factor is, you know, small businesses and middle market businesses, they have the same problems large businesses have. And the complexity is there, the same regulations, the same changing regulations occur. So, you know, they need to be, you know, up to date with automation and technology. I also think that every company wants to do more with less, right? Everybody's trying to do more with less, and you need the automation to do that. So I think those driving factors are right on target. I also think just naturally technology is growing, right? And so tax has to keep up. All the other business processes are doing automated approach, touchless systems, feeder systems, commerce systems. So, you know, the same challenges that the big companies have, the smaller ones have. And so that's why you need an automation strategy and you need to automate your processes.
And I also think that it just lends itself to a better customer experience for those smaller, you know, a happy customer is important no matter what size your company is. And I've seen automation really help that process along. I mean, you have less issues with exemptions, you have less problems with invoice or billing statement not looking correctly. Your revenue stream, your days of sales outstanding will reduce. The customers will be happier, as the vendors, by the way. But we do see a lot of companies automate their sales function first before they go into purchasing. I think that's probably a more pressing need on the sales side.
Great. Thank you guys so much for those excellent insights. Now, Kirsten, can you describe any particular limitations of using a native ERP for tax calculation and remittance?
Sure, and that's a good question because you know, that's the first hurdle, right? We have an ERP, but can we use that ERP for the indirect tax function? And I want to preface this. I've had customers that had a mix of countries and jurisdictions on a tax engine versus an ERP native. And there's a wide variety of what an ERP can do. The functionality varies greatly depending on what ERP. You know, are you talking about SAP or NetSuite, QuickBooks, Workday, you name it, Oracle? It really varies differently. I think the main thing to consider though is when you start your ERP, it really is empty. There's nothing that is actually built in terms of content. You have to configure it from the ground up, meaning giving it the right content. So particular limitations. So we mentioned the complexity of tax regulations. They're constantly changing. Lee just mentioned the many rates that are updated annually, not just US and Canada, but globally. We have 13,000 tax jurisdictions in the US. They have to be kept up, right, with ever evolving tax rules and rates. This is time consuming. And once you're on the hook to maintain this natively in the ERP, you will need to monitor and maintain it. Second, tech-specific functionality. These native ERP systems are designed to handle a wide range of business processes, like your order to cash and procure to pay or intercompany transactions, but they're not necessarily specific to tax. I mean, they're not tax engines, so to speak. So they may have a lack of specific features, functionality, and capabilities that are required to handle the complex tax calculations. And I'm thinking, for example, max tax in Tennessee or multiple tax jurisdictions, tax exemptions, right? If you have a customer that is tax exempt, or you want to make them tax exempt, there's this, I'm sure, a setting possibly in the ERP, but what if this tax, what if they're exempt to an exemption certificate and this certificate now expires? Where will you handle this? Is this going to be handled in the ERP? And how, right? Those are things to consider, as well as special tax rules that are specific to certain industries. I'm thinking of the manufacturing equipment in Alabama that has reduced rates or reduced sales tax rate. All that needs to be researched, made aware of, and then maintained in the ERP. Next is the lack of integration with tax authorities. These ERP systems do not have a direct integration with tax authorities or filing systems. So how will that be handled? Will you be manually extracting the data from your source system and then manipulate it to input it in your tax authority system for filing a remittance? That is time consuming in itself, and it's prone, it just increases the risk of running into errors. Next is just difficulty in adopting to changing requirements, and this goes hand in hand with the first point of complex tax regulations. If your regulations change, well, what do you need to do in the ERP to keep the system fresh and adapted to the new requirements? This might be easy, it might be hard, it might require customization and additional modules. Then the limited reporting and analytics. Reporting is super important, and robust reporting is maybe required to pull data from various tables in your ERP, because it might not be as robust as you need it to hold up to your month-end or year-end analysis process. So that might require some extra tools or manipulation once you have extracted the data from the ERP. And then localization. This applies really to companies that are going outside of the US. ERP systems come with localization packages. They help you, including forms in the local language. They help with the specific tax rules and formatting, reporting specific to the country that you're going into. But not all ERPs have the same capability as it comes to localizations. So overall said, businesses should really carefully evaluate if the native tax calc is sufficient for the complexity of the businesses and the jurisdictions they will be in or will plan to be in. And then second, these resources that have to research the tax rate changes and implement and maintain them, are they available? Right? Are they even, do you have a solid tax department? Do you have an IT department? They need to go hand in hand and work together. And then last but not least, the training cannot be underestimated, because especially in departments with high turnover, high personnel turnover, there's a training requirement that goes, along with all these changes or the configuration to be updated and maintained. So thanks.
Yeah. No, that's great, Kirsten. I'm just going to add one thing. Kirsten mentioned maintaining the ERP, and that was a key point in my mind, because you can do everything in the ERP. It's just the customization that you have to do is going to cost you money to do, and it's going to cost you a ton of money to maintain. And so, it's difficult to kind of land with an ERP. Depending on your business. If your business is so simple that you just have a couple rates, then okay, ERP works. But once you go beyond that, maintaining that content and just like Vertex, like they monitor the content the content, right? You get an update every month. That's a huge lift off of your department. You don't have to monitor those rules and you don't have to apply them in your system. So that's key. And Kirsten did a great job there going through that.
Awesome. Lee, did you have anything to add before we move on?
No, I felt like that was comprehensive. Good. Thanks.
Perfect. Thank you. And I think this next question is extremely important and relevant, especially as it addresses tools and technologies as these continue to emerge. So Nick, if you don't mind answering first, what is the current state of emerging tax technology? And can you share some examples of what you're currently seeing?
Sure. The current state of emerging tax technology is off the charts. The AI and the RPA and the machine learning that's all throughout the tax function today is widespread. I'm sure the people on the phone have noticed the AI increase in the business function and in the tax function. For an example, or to give some context, AI increases by 38% a year. And that is increasing exponentially. So next year it could be 50, 60%. By 2030, they predict that 30% of the manpower hours will be replaced by AI. That's huge. And it looks like people are losing their jobs, but they also say that 133 million jobs will be created around AI. So there's a huge shift towards more technology-driven processes and using emerging tax technology and also just emerging technology across the board. Recently, they've made some advancements in AI and RPA and machine learning, and it's much less expensive now. So it's easier for companies to get into, and it's more effective, efficient, and it's easier to use. So because of that, it's even going to be used even more. AI and emerging technologies being used in products that you use every day, and it's being used in tax products all the time now and built into tax projects. I think even Vertex is dibbing and dabbing in the AI space for mapping and product mapping and some other areas. So, and I'm sure your companies on the phone, the people that are on the call, you're working, you have AI going on in your companies as well. Some of the key areas where tax is using, emerging technologies is compliance, reporting, audits, forecasting, planning. These are all areas where, you can leverage, emerging technologies, AI, machine learning to get a lot of information analyzed, a lot of work done without manual effort. Another thing is cloud-based tools as well. Everybody is into the cloud-based tools, less infrastructure for your company, easy access, centralization. It's the right way to go, and companies are moving towards that every day. So overall, the future of emerging tax technology is huge, and is going to keep increasing, and you're going to see the shift in your own area, and your own businesses. A couple examples. One example is a phone call I had this morning, actually, which was very interesting. Kirsten and I were on, and the company is actually putting a touchless AP system in, which will require invoices to come in through emails and different ways, and goes through a scanning process, and it OCRs the details off of the invoice. The interesting thing is they're going to use AI to define that tax code on that vendor invoice, which is very interesting, because it will look at the elements of that invoice and then determine whether it's what type of tax it is and the rate, and we'll put the right tax code on there. So it's very interesting. Now that's a business and AP process, but what is tax, right? Indirect tax is a component of the big mega processes, right? We don't typically have our own processes. We do, but they're components of AP and AR. So technology, as it grows, tax technology has to grow with it, or it's going to be left behind. Another example I will give you is compliance. We actually And I'm actually working with someone who actually is automating the filing of their tax returns. So they're actually able to use RPA and actually file the tax return, go out to the website, log in, upload the tax return, get the confirmation, store it in a folder. Everything's being done by the RPA. So that's another example. Also, RPA can take data from different sources, compile it, organize it, put it in a certain format for you. It's another example. And the last example is audit. For audits, it can analyze tons of data. You would need a whole group of people to actually analyze the amount of data that you could analyze with AI or with RPA. And I think there was a study where it took them 4 weeks to analyze audit data, and they did it in hours with AI. They still had a person to touch it, right? Still had to analyze it and review it afterwards, some manual intervention with the results. But it extremely saved time and saved money. So overall, right, RPA is just one example of the emerging tax technology, but it's one example of showing you how it's revolutionizing tax operations, and it will continue to innovate and move forward as time goes on.
Amazing.
Yeah, and if I could just chime in a little bit there, Brittany. So one of the other areas we're seeing, and Nick is 100% right, AI. I mean, I'll be out at the BDO conference in May, and I had to sign up for sessions, and half the sessions have to do with AI. I'm only slightly exaggerating. And that's common with every conference I go to. There's a heavy emphasis on AI, and we're leveraging it, as Nick mentioned, for certain aspects of product mapping behind the scenes. But another area we've also come to market with a couple of years ago and have seen great success is the containerization. And so you think about that. In the past, if you're a Lowe's or you're one of these big retail companies that has 1,000 or so brick and mortar stores across the country, deploying your tax engine to those point of sale machines remotely was a bit of a challenge, somewhat of a lift. The IT teams we had some products called Retail Tax Extract and Light Local Indirect Tax Engine, or Light, where we could solve for that. But now with containerization, what we call edge computing, we can do that on schedule, remotely, and automated. So it could be a nightly process, it could be a weekly process, it could be a monthly process. And you can see it through your deployment vehicle. You can see from which locations are up to date, and you can kind of tailor make the container to the location. So if not every location has all the same products, right? I mean, there's not going to be much use for some products in certain parts of the country as there is in other parts of the country. So you can containerize, you can custom make your container to suit the location that's being deployed. So those are the kind of the one thing I wanted to add on from a technology side is the edge computing and the value we see there for automation.
I just want a quick add, Brittany. As Nick went through all the tool and Lee went through all the tools, what I think needs to be mentioned is that the accelerators, for example, we've been an accelerator, we're working on testing automation of the entire testing function. And we see huge cost savings that when when BDO works with Vertex on a client, let's say, and automate, go through the implementation, those are savings that we will roll onto the customer. This is something that I think everybody should be excited about, because it will be time effective, efficient, and cost saving all at once. Plus, de-risk really much of the processes. Thank you.
Wonderful. Well, we appreciate you guys sharing those thoughts, especially on advancements in tax technologies. Just to follow up on that question, Leah, I'll pose this to you first. How are SMB businesses harnessing and applying these tools to scale for growth and expand operations into new markets or regions?
Yeah, it's a great question. I mentioned the edge piece as kind of a preamble to this answer as well. But there's also, retailers, think about retailers, think about it in your own personal life. They're taking a more nuanced approach to the customer experience. They want to be on your phone, in your life, and available to you. I'll give you an example. And more integrated, basically. They want to become more, retailers want to become more integrated with your life. Give you an example. So Sunday morning, I was going to go vacuum our stairs. We have 2 dogs. I was going to vacuum the stairs. Well, the handheld vacuum that I always use for years just stopped working. And so I go on, do what everyone does. You go on Amazon. I made an order. It was going to be there between 5 p.m. and 10 p.m. I got there like 5:30. I was able to get the stairs done. And when I was growing up, if that same scenario happened, my parents would have gotten out the JCPenney catalog, and 2 weeks later, our stairs would be clean. So that kind of, and so companies want us to, or companies want the tax engine to be a part of the instantaneous business and commerce life cycle that we're starting to see. Amazon's a customer of ours. They've been for so long, and have kind of been one of the leaders in that scenario, that instantaneous retail response. So I think that more nuanced, more integrated approach. Another area we're starting to see a lot more, and this is something to consider. Their marketing departments around this country are taking a different approach to marketing than in the past, right? So it used to be, you'd watch golf or football on TV and you'd see something advertised and you'd think about buying it and maybe you'd consider it throughout the week, and then you'd see it again and okay, you make the purchase. Now, for instance, in my job, if I'm researching a company that we're thinking about partnering with, and they'll do a Google search of that company shows up in my social media, right? So it can be something that shows up in my social media. And what am I seeing in my social media? I'm seeing that they're using an influencer, and that influencer has got a product of theirs, and they're demonstrating how the product is so wonderful. It could be a water bottle, it could be whatever. And they've been given a free product to show on their Instagram account how it works, how it looks, what it looks like. Maybe they've got 20 products, different hats. It could be a beverage product, whatever. But all those free products are not really free. They have to be taxed at the consumer use tax side. So we're seeing companies come to us with influencer campaigns that they know have tax exposure. So we're not just seeing the things on the sales side. We see more on the use side as well in that scenario, as well as on the construction side. Construction companies are coming to us all the time saying, how can we apply use tax on a sale because certain of our products become realty instead of personalty, and we need to have that baked into our inventory. We've actually been taking losses because we have to accrue it on the back end, and it's eating into our bottom line. So solving for those kinds of scenarios, whether it's the more nuanced approach that the Amazons and the Etsy's and the Wayfairs of the world take, or the use of influencers and the exposure that has, as well as the use tax on a sale concept. It's all becoming a bigger part of the day-to-day discussions that I'm seeing from where I sit.
Great, thank you. And Nick and Kirsten, do you guys have anything to add before we move on?
No, I would just agree with Lee there. Actually, I feel like the 2 biggest calls we get recently have been use tax or e-commerce. It seems like everybody wants to have the customer's experience and the light touch customer experience, no friction. So everybody wants to buy online, and doesn't matter the size of the business or the type of business, right? You would think a distributor wouldn't want to need online, but they all want that experience. And so I think Lee's right on target. And whenever I think of like expanding and contracting and growth in new markets and regions, the first thing that comes in my mind is Vertex, to be honest with you, because it's a system that you can scale and it can manage your growth and whatever expansion you have, all that jurisdictional information, content, and rates are housed in there. So really that's the ultimate tool is, an indirect tax system like Vertex that can provide you the ability to expand and contract with your operations and be able to handle your taxes across the board.
There's also a lot of talk about digital services, right? I think we we had a whole session on this in late November or early November. But I think that is something where not every jurisdiction is necessarily very clear on ruling. And I think like Vertex will definitely be on top of changes as they come in and send those out via monthly updates. So I think that is something that I will be, concerned if I had to research it myself and stay on top of.
Great, thank you all. And Kirsten, are you able to share any recommendations on how to evaluate which type of automation or product is the best fit for your business?
Yes, very much so. This is really, if you will, our bread and butter, because a lot of times a business will come to us and they have certain requirements, but not really know where to go next. So how we typically start is by assessing their needs. So we recommend to have a workshop where we list just about every specific text process or task that needs to be automated. And they, like Nick said, it might not be a function in its own, but like a side function of your business, your order to cash, procure to pay. But regardless, it's super important to have that aligned and done correctly. So we sit in a workshop, we identify all of the pain points, and we can list them, from top to bottom. What is the most challenging? What are areas where we definitely have a concern? Let's say maybe, you're not sure that your use tax is accrued properly because all of your IT equipment, your laptops for your employees is purchased centrally, but then it's used all across the US. So, well, how do you need use tax needs to be accrued based on the location of usage. So that is something that might be a concern. Or other areas where automation can bring the most value might be low on the totem pole, might be very high. So that's the triaging that really helps to understand the requirements and functions that you would want in an automated solution. And we typically call that discovery session or requirement gathering phase, but it's essentially a reflection of your assessment of your tax function. And then we want to consider how scalable and how flexible the system has to be. Your business, your business better than anybody else. Do you want to grow? What are your plans to expand into new markets or regions or countries? We have to make sure that whatever system or solution you go with will be able to handle the increased volume of data, will be increased volume of transactions, adapt to the changing tax regs. So all this, you want your company to grow and you want the system to grow with it. So that's one. Another issue is, or another item to consider is how easy the system can be implemented and integrated. For example, Vertex has standard integrations to many of the ERPs, leading ERPs. So that will be a standard integration you really want to prefer, because if it's not standard, it will be likely requiring customization. Customization equals cost. So to be most effective and most standardized in terms of integration, you would want to pick a solution that has a standard integration. Then the compliance capabilities. I mean, I've been talking about automating the calculation of the tax, but of course we need to be sure that it also handles the automation of the compliance. We have companies and clients that bifurcate and not necessarily go with the same provider for the automation of the tax calculation with the compliance, but it is more a seamless process to have one provider and essentially take the data that the tax determination engine determines and reports on, and then extract that and move it into your compliance software. So, and mature products like Vertex Returns, they have been around forever. They cover most jurisdictions and countries for in returns. Then user friendliness and training requirements. What I have seen, some tools are just more user intuitive and user friendly than others. So our team at BDO, what we specialize in, or what we love to help companies with, identifying the right mix of tax softwares they should look at. Then we provide demos. We invite the different vendors to provide demos on their live system so that the end user, before they even buy, right, get a feeling of what they're looking at, how easy it looks to be configured, the flow of the screens and all that, so they can ask questions. That is very, really important when you consider any other software. It's like test driving your car before you drive it off the lot. Training is super important. Again, if you have a department with high turnover of personnel, you want training documentation in place so knowledge transfer can occur. And then, seek recommendation and review. I mean, talk to other industry peers or tax professionals or advisors like BDO. What is their automation solution experience? That will help. And then last but not least, you need to consider the cost. There's cost involved, obviously, with the automation solution. It includes the implementation itself, so setting up the system, but also the licensing. Fees will be on an annual basis. You have ongoing maintenance fees. You may have support fees. Consider that and mirror that to the potential return of investment. I think that's very important because you will see over time that the time savings are there. You will have cost reductions. You will have improved accuracy because we will have tax determination first time right every time. You'll see your month-end close cycle reduced and shrunken. And overall, mirror those two and evaluate, and you'll be much better aligned to identify the software that's right for you. Thanks.
Excellent. Thank you. Thank you so much for those recommendations. And this next question, I do want to talk a little bit about SMB and MM tax life cycles. So Nick, I'd love for you to kick us off. Can you explain the typical process from discovery through implementation and how to best apply automation technologies?
Sure. So tax life cycle from discovery through to implementation, there's various points in that process where you can leverage technology to apply to that life cycle. And one is in kind of Kirsten already went through a lot of them, but because it's almost the same process when you're actually determining what type of automation solution is right for you. But discovery is one, and that's where you're going to look at your requirements, understand the regulations and laws that pertain to your business. Look at the processes you have to make sure that they're good processes, right? You don't want to automate a bad process. So you definitely want to kind of look at those processes. And so when you're doing that, you can use automation tools to determine if the process has errors or check for risks. And so during that discovery process, there's AI you can use and analytics you can use that can really uncover a lot of anomalies and things that you don't even know your business is dealing with before you come up with a strategy, let's say. So the next phase after you determine, what it is that you need to do through the discovery, the requirements, and define the objectives, then you have to do some planning around it or some design about what you're going to do. Same thing when you're doing that, you can do what if scenarios with AI and you can determine, the best solutions. You can actually test the solutions using AI and RPA to determine the best, to get your best results. So that's another area. And then there's compliance. Everybody has to comply. We already talked about the tools and how you can use the tools for compliance, but you can also use them in more of a detective mechanism to determine where you're not in compliance, right? Before you do, you do your filings or your reporting, you can actually run analytics and check for anomalies and find errors before you actually do your compliance. Another area where you can insert technology to, one, help you, determine where your compliance issues are, but also solve those issues as well. A lot of companies are looking for that. They're looking for ways. There's a lot of multiple source system companies out there and feeder systems. We talked with Lee and Kirsten, we talked about e-commerce systems. So multiple systems to manage. And so it's important to kind of make sure all of them are consistent and you're getting consistent results in those systems. Reporting's another area. You can use tax technology tools to pull reports down from different systems. You can use it to organize the data, format it, save it in locations. There's all kinds of automation tools that can be used on the reporting side. And then there's the implementation. So you've done the plan, you've done the requirements, you've created your plan, you have your compliance area risks and where you need to be compliant. So, and you've looked at your reporting. So now it's, what are you going to implement? So now you've defined everything. And once you have that, you can use the automation tools to help you automate all those processes, because there's automation tools that we can use to implement, and there's also automation tools that you can integrate with your other systems to, do like a Band-Aid, let's say, or to kind of fill the gap. And so during this type of tax life cycle review, there's going to be different spots where you can apply technology to improve your operations. And last thing I'll mention is we also at BDO, Kirsten and I, we also use tools for implementations. We have automation tools that actually can accelerate an automation. So not only do you use the tools during the whole life cycle, but there's tools that we can use for the implementation, for testing wide range of transactions, and every variation we can test with our tools. Also for configuration. So we have lots of tools that can accelerate the implementation, save time, and save actually cost as well. So it's best to apply any automation technology after you know what you need, right? And you really have a strategy in place. You review all your compliance. You have defined your reporting. That's the best to do it then. And also, you also, like Kirsten mentioned, pain points and challenges. That's where you want to focus, right? Because that's the biggest bang for your buck, right? So you want to there needs to be a cost benefit when you're doing this to make sure you're not automating something that's really not worth automating, which is not usually the case, but you definitely want to look at those areas that give you the most impact for the organization and deliver the most value.
Great. Thank you so much, Nick. And I do want to make sure we get to Q&A. So if you guys don't mind, I'd love to maybe go around and give some final thoughts. Lee, if you don't mind starting us off just on, what are best practices on how organizations can be proactive when it comes to the adoption and implementation of new technology, automation tools. If you want to kick us off, and then we'll go around and hear final thoughts.
Yeah, I mean, some of the ways I think about this is when we talk to companies, we say, well, how many days a month are you spending on indirect tax? They say, well, it's only 3 days a month. Well, that's almost 20% of your year when you break it down. That's a lot of time to spend on something that's non-value add. And then, then we start, making them aware of some of the changes that have been happening in the tax landscape, especially in the US with retail delivery fees and things in Colorado and Louisiana and Alabama. Minnesota's now got a retail delivery fee coming out later this year. Do you know that that's not refundable, or it could potentially not be refundable? So if there's a credit memo, how do we solve for that? And then the integration options, as was discussed earlier, Vertex pretty much owns all our integrations. There's a handful that we don't, but we own and operate and manage all those integrations. So if you're plugging into Microsoft or NetSuite or SAP or Oracle, we have those integrations now in-house, and I know the developers, and I know the people that run those, and so those are considerations. And then lastly, it always comes down, one of the questions in the chat was about price. A lot of it in the small mid always comes down to price, right? I mean, that's at the end of the day the biggest issue. And so at Vertex, we do things based on revenue. It's not based on transaction volume. So there's no variability in our pricing. We give you a price, you're locked in at that price for the next 3 years. There's no, you could do it 1 year too, but I mean, it's like, well, if I can get locked in at 3 years for the revenue that I'm getting today, then why not? And so we see a lot of value on that side. So those are kind of some of the tools I talk to our customers about before going to management, making sure they're aware, and then Nexus monitoring, things like that, all the different rate changes. So yeah, that's kind of it. And being cognizant that time will pass to the others.
Excellent. Thank you, Lee. Kirsten, we'd love to hear your final thoughts.
So I think it's important to stay informed, right? I think like just by signing up for this seminar or panel discussion is already a great first step. I hope that we're able to share some of our, combined knowledge, and to help people understand what is all involved. It's not easy, but it can be done. And if it's done right, it is fabulous, right? Automation, touchless, free, completely correct tax determination is a wonderful thing. And I think staying on top of what is the latest and greatest by attending this, or for example, Vertex Exchange, always a nice conference worth going to update on these types of things. One thing I want to mention is if anybody should be interested, a lot of times we see IT actually financing a lot of these projects. So I think it's important to stay really close contact and aligned with your IT and finance departments to have a strategy aligned with what your organization needs, not just today, but look into the future, right? And then develop a technology roadmap. Like, what is your vision for the company? What are your goals to adapt to new technology tools? And then what's your timeline? And clear that up with the budget and resource allocation you have available to yourselves. And I think that will help you adopt a really nice plan. So I will leave it at that, considering the time. Thank you.
Great. Thanks, Kirsten. Nick, we'd love to hear your final thoughts.
Yep. I think Lee and Kirsten covered a lot of the final thoughts that I would have, but I would reiterate staying informed and really understanding your processes, like in documenting your processes, and also, connecting with IT and finance, right? So that they know your processes, because sales tax crosses all the processes, right? It's not like income tax, right? It crosses all of the mega processes in the group, so it's cross-functional in nature. And so it's very good to keep them in the loop with your processes so they know your tax requirements and they're embedded into those mega processes. But I also think Kirsten made a great point, and Lee made tons of great points. Looking out into the future too, right? You don't want to build an automation solution that's for today. If you're a substantial company and you're trying to grow, you need to think of the future. And the last thing I would say, there are solutions that are lower cost. I saw that note in there. There's batch solutions that can be done, and so there are options for lower budget as well. There's not a ton of them, but there are options, and we do a lot of that as well. So there's no one size fits all. There are options out there for technology and automation.
Excellent. Well, thank you guys so much again, Lee, Nick, Kirsten. That is all the time we do have, so we'll be happy to share any questions we did not get to with you guys after. But thank you guys so much for such an insightful panel discussion. I also wanted to thank everyone who joined us today. This session, along with all of today's content, will be made available on demand following the event. Thank you all so much again.
Thank you.